So, good afternoon, everyone. Welcome to this webinar on the outcome of the autumn budget, where we'll be going through the life science announcements in the budget and also some quite significant announcements that have happened outside of the budget, but very much relevant to the life sciences sector and the financing of it and the commercial environment in the UK. Thank you, Richard, who's already put in a comment about the great slide. We've got Father Christmas and the Grinch because we're in the Christmas season now. I did get the team to try and do an AI-generated Father Christmas and Grinch of Rachel Reeves, but it was too terrifying to include, so I saved you the worry there. So, welcome, Penny. I'm really pleased to have Penny Simmons from Pinsent Masons with us today. Penny will be joining us to talk us through and comment on the tax elements of this budget, as she is a legal director in the tax team at Pinsent Masons. Welcome to the webinar, Penny.
Thank you.
So it was a very interesting budget. Quite a chaotic run up to it. Much talked about that and things that have happened since. We're of course going to be mostly commenting on what the announcements were for life sciences, and I will leave you to listen to the radio or watch the TV or read the newspapers about everything else that is going on in terms of the Chancellor's delivery of this budget. Now, this budget did come at a critical time for our sector. We are hopefully towards the end of the longest funding drought to hit the sector in certainly my time working in this sector. From our vantage point, we know that many companies in the membership and across the life sciences sector have been finding the financing environment very challenging. The commercial environment has also been very challenging for larger companies, and that has knock-on effects. And many companies' cash runways have been nearing an end. And our own data published by the BIA showed that only 187 million was raised by the sector in the third quarter of this year. And that for the total this year, for 3 quarters, is at 63% of the 2024 total. So we are some way behind, unfortunately, fundraising for 2024 of hitting that total. And a lot of that money that has been raised this year, as many will know, has gone into a few very high-profile, slightly de-risked, high-profile companies. So many other companies are finding the environment very challenging. So in light of that, in the run-up to this budget, BIA did run a campaign to highlight this to the Chancellor. We, of course, made an official formal submission to the budget, setting out our policy recommendations. But we also led on a sector letter signed by 200 CEOs from our membership, calling on the Chancellor not to raise costs on businesses even further. Obviously, there was the budget last year where various costs were added onto companies' books. And instead, we said to deliver targeted support for the sector by accelerating public funding into government grants and British Business Bank equity investments, enhance R&D tax reliefs, enterprise investment schemes and enterprise management incentives, and to double down on the Mansion House Accord and financial reforms to unlock new money from the pensions industry to help our sector. So that letter was delivered. It got great pickup in the Times. You can see the headline there. I spoke in the House of Lords, setting this out, delivering that message, and Kit Malthouse MP, who is chair of the all-party parliamentary group for life sciences that BIA supports, stood up in the House and made the case as well for investing into life sciences. So ahead of the budget, we did use every lever that we can, including all of our personal connections within government, to make sure that our sector's needs and our policy calls were heard at the highest level. So the headlines of the budget were that, as we called for, EIS, VCT, and EMI schemes were significantly enhanced following that campaign, which was obviously a great win for us. Really delighted to see that. Actually mentioned quite early on in the Chancellor's speech. There was a greater focus than we've seen in quite some time for entrepreneurs and scale-ups as well. There were some ISA reforms around stamp duty to help publicly listed companies or to bring companies to the public markets, which were very welcome as well. But less positively, business rate increases could impact our sector. They're raising costs on businesses in general, but we do fear, although it's hard to understand the impact at this point, we do fear that life science companies could be unfairly impacted and disproportionately impacted by that. Outside of the budget, everyone will be aware of the US-UK trade pharmaceuticals tariffs deal done yesterday. We'll be talking through that. That was obviously outside of the budget, but a very significant development. And also outside of the budget, we saw some announcements with a great focus on scale-ups from UKRI and the British Business Bank that we'll be sort of talking about through the end. We will be taking questions at the end. I've also got a survey question halfway through. So please do use the Q&A function to ask questions and the chat function if you'd like to comment at all as well. So moving on to that first headline, the enhanced tax incentives for EIS and VCT and EMI. For those who don't know, EIS and VCT are tax advantaged schemes that encourage people, high net worths, or anyone, certain VC funds to invest into early stage businesses. We, for a long time, have said that whilst these are very excellent schemes, they work very well in many respects, they haven't been updated for some time. So we've been calling for a lot of the limits within those schemes to be updated. And as you can see, for EIS and VCT, 10 million annual fundraising limit was set, and no, this is wrong. Sorry. The annual and lifetime limits were doubled from 10 million to 20 million for the annual limit, and the lifetime company limit was doubled from 20 million to 40 million. We had called for it to be raised to 50 million, but I think 40 million is excellent for knowledge intensive companies. The gross asset tests for EIS and VCT were also increased to 30 and 35 million. But there was some rebalancing of the reliefs as well, with VCT income tax relief decreasing to 20%. On EMI, so these are tax advantage employee share option schemes. The eligible employee limit was increased to 500 employees, the gross asset test to 120 million, and the company share option limit to 6 million. The maximum holding period will increase from 10 to 15 years, which is really welcome, as many of our companies have been telling us that they were reaching that 10-year limit, and EMI notification requirement will be removed from April 2027. So significant changes, perhaps not as much as some would have called for, but very welcome. Penny, what are your takes on this? And do correct if I've got any of those numbers wrong as well.
Thanks, Martin. I think the first thing to say, and let's focus on the positives, is this was a positive announcement in a budget where there were very few positive announcements. And if you like, it's not a tax giveaway, but it certainly was a budget where there were few things to kind of jump up and down about in terms of increased tax support. So that's certainly a positive. But I do think we have to, there has to be some caution here that, and Martin, you said it yourself, this this was very much a correction. These schemes hadn't been updated for some time. The government has acknowledged that, particularly in relation to EMI. You've got a scheme that was introduced in 2000 and last updated in 2012, and the government has acknowledged that in their documents that these changes very much reflect changes to the business environment, inflationary pressures and what have you. So yes, I think that this is positive, but what I do think that is missed here, and I hope, and I know, Martin, you'll mention that entrepreneurs call for evidence shortly, but what I do hope that we will see is actually a wider review of these rules, because although these provide valuable tax support, and we should applaud that, the schemes themselves are complicated. The rules are complicated. There are lots of traps for the unwary. And one of the issues that we often find is when there are support schemes in place for smaller businesses, if they are overly complicated, smaller businesses that don't have access to tax advisors, and they don't have simply the capital to pay for advisory support, they can't access these schemes because they can't pay for the advice that they need in order to access them. So yes, I think let's applaud the fact that the government's definitely acknowledging that there is a need for increased support to help startups. Yes, let's acknowledge the fact that they listen to the BIA and to other stakeholders in increasing the thresholds. But I do think that there needs to be a bit of pause here, and a wider review of these rules to ensure that they're accessible for all.
Thank you, Penny. Absolutely agree with all of that. And yes, as you mentioned, there is a consultation, as I said earlier, a greater focus on entrepreneurship as well in this budget, and in plans for the Treasury going forward as well. So earlier this year, Alex the Pledge, MB, was appointed as the entrepreneurship advisor to the Chancellor. She's a entrepreneur, having founded a few digital enabled tech businesses outside of our sector, of course. But she's really led this work within the Treasury, working with the Chancellor on developing more support for entrepreneurs, which is certainly not work finished, but this is the starting point. And we'll never know whether she's a fan of train spotting, but I just thought, as reading through this entrepreneurship in the UK brochure, the government is very keen to make sure that they know that they choose entrepreneurship and growth. So alongside that, it's not a strategy yet, but we could imagine a strategy coming. Alongside that, in the budget were some down payments. UKRI will be investing 1.5 billion to help the most promising research companies spin out from universities. 4 million will be invested into new enterprise fellowships. So this is something quite new. Again, this is to help academics set up businesses, increase the porosity between academia and industry, is very welcome. And 25 million will be invested into doctoral training centres with a greater focus on entrepreneurship. So PhD students will get more guidance on how the world of business works, how they might go about setting up companies. So I think that's very welcome. There's also a consultation to go further, and the government is seeking views from everyone. There's a QR code there that can take you to this consultation with call for evidence. And they're looking at the effectiveness of the existing tax support, so the EMI and EIS schemes and VCT as well, gaps that might exist, and also further options for rebalancing or better targeting current support. So it looks like they're not really thinking of rolling out more without taking away something elsewhere. I think that's what I interpret that rebalancing to refer to. But Penny, what were your takes reading through this document?
I'd agree with you. The word rebalancing was interesting. I think it came up a few times, and I took the same takeaway that if there's a pot of money, they're looking at how best to use it. And they also talk about that a lot. They talk about more targeted, more effective, getting good value for money for taxpayers. So not necessarily a bigger pot, but certainly looking at how they use that money. I also think it's interesting that this is a call for evidence, and from my perspective, as a tax advisor, I would certainly be encouraging everyone who could be affected by this call for evidence to respond before the deadline on the 28th of February. We are increasingly seeing these kinds of calls for evidence across the tax system that come in before we see a consultation, and this is very much, part of the government strategy of listening to stakeholders, to the public, and making sure that their support is targeted. So certainly, if this is going to affect you, and I'm presuming it will affect lots of those on the call, then this is the time. It's a very broad consultation, so they ask lots of questions. So you don't need to respond to every question. You just need to respond where you have something to say. And I really, really would encourage people to respond to it. And again, I think it's interesting that they are looking at the EIS, VCT, and the EMI schemes. They have a whole tranche of questions where they look at those schemes and they ask for views. And again, it's making sure that the support is targeted and getting where it needs to. But they are also looking beyond that. So they're looking at, and the government's talked about this a lot. And I know that this is generally, in terms of feedback to the government and the Treasury, has been about, well, how do you grow companies beyond the EIS and the VCT stages? How do you get companies to stay in the UK? How do you scale them up? And so I think that what we may see. But again, we're not there yet in terms of a strategy, and certainly not there yet in terms of a consultation. But what we may see is targeted support for startups, but then trying to reuse some of that pot in order to encourage growth and scale up. So again, the jury's out in terms of what we'll see, but certainly if you are going to be affected by this, I would encourage everybody to respond. We've seen this time and again that I think they do listen, particularly at this stage, in order to get a flavour of what might work and what might not work. So 28th of February is the deadline. If this affects you, definitely respond to it.
Yeah, thank you. And of course, the BIA will be responding. Our Finance and Tax Committee will be leading on that, and Penny is a member of that committee as well, so will be deeply involved. And we'll probably be providing some guidance to members on how to respond as well, should they wish to. But please do use that QR code to go on and look at the questions. I know many of you will be directly impacted or have strong views on this, so please do, either through the BIA or personally, do submit your views. Moving on to R&D tax relief, you'll remember we did in that letter call for them to be enhanced. It's still a matter of personal pride that we managed to get when they cut R&D tax reliefs a few years ago down to 18p in the pound, we did manage to get them up to 27p for R&D intensive companies with the great support and hard work of FTAC, Finance and Tax Committee of the BIA. But that's still not back up to the 33p that they were originally cut from. So it's still a matter of personal ambition to get that back up, and that's what we're calling for ahead of the budget and in our submission. We didn't get that, but I thought that's quite unlikely at this stage. But it is something we'll be continuing to push for to help R&D intensive companies in our sector. But there are no other major changes, but there were some announcements. So Penny, do you want to talk us through what was announced on R&D tax reliefs in the budget?
Sure. So I think it's a good thing that there were no major changes. I think we've had a lot of change, and one of the things that I think businesses have been asking for, both small and large, has been for some stability. So no major changes was a good thing. They are going to move forward with the advanced clearance pilot scheme, okay, and that's going to be introduced from this spring. And I think, look, again, it's very much a pilot scheme in terms of the advanced clearance, and we will see where it goes. I'd also encourage those who think the pilot scheme applies to you, to use it, because I think the revenue, again, they will use this very much as a work in progress. I don't think anything's kind of determined. Technical changes for RDEC, I'm not going to really dwell on this. We see this a lot. We see this a lot when we have changes to tax regimes, tax rules. That often you see a new scheme is introduced or a new set of tax rules are introduced, and over the course of the next couple of years, usually announced in a budget or in when the draft finance bill is announced for the next year, you'll see technical changes, and simply this just kind of is to tweak the rules to make sure they work as the government intended. So we do need to be aware of them. We do need to be alive to them, because sometimes things get changed in a way that we wouldn't necessarily have expected, but it's again in accordance with what the government expected. They're keeping the rates. The 20% RDEC is being maintained. And I think, and Martin, as you've said, we will continue to try and improve or increase the relief that's available for SMEs and for research intensive SMEs. I just don't think we could have hoped to have received that in this budget. I think that what we've seen in EIS and VCT is great, and I think that with the new scheme having been introduced, the government will allow that to bed in. The revenue will be very much keeping an eye on ultimately usage stats, but also fraud stats. We know that that's been a big concern. We know that, it's not necessarily, well, it hasn't been something that's involved this sector, but we know that there's been huge fraud and abuse, and it continues to permeate across the media as to abuse of R&D tax credits. So what we would expect is the revenue and the Treasury will be keeping a close eye on the usage of the schemes, making sure that the schemes are targeted, relief is targeted, good value for taxpayers, which are these buzzwords that we continue to see from the revenue and the Treasury. And then hopefully, once they are satisfied that the regime is better targeted and they have got a handle on the fraud and abuse that was existing within the scheme, then we may well see increasing support for particularly for research intensive SMEs. And the only other thing I'd say is that beyond R&D tax reliefs, in terms of their efforts to target or prevent fraud and abuse of the tax system, other measures are being introduced that may well or are certainly intended to combat some of the dodgy advisors out there. So those measures, for example, registration of tax advisors, those measures alongside kind of the tweaks and that we've got to the R&D tax relief system, what I think we will hope to see is that fraud, abuse will significantly reduce. There'll be more confidence in the R&D tax relief system as a system that really is working to incentivize innovation and incentivize growth in the UK. And then we might see some further commitments from the government.
Thank you. Yeah, I completely agree. The opportunity comes when they feel that they have successfully removed the fraud in the system. Not only does that mean it will be correctly targeted, but also there will hopefully be savings that could be redirected to genuine companies. Just as important as the actual tax relief policy, the delivery by HMRC. And although this was mentioned in the budget, it was actually announced a month ago or so. HMRC has set up an expert advisory panel of sector experts to help HMRC understand the latest developments in R&D, particularly around life sciences, AI, and advanced manufacturing. And we're absolutely delighted that Mel Strange, chair of our Finance and Tax Committee, is on that panel, one of only 6 or 7 people. So a really great opportunity for our sector to help HMRC deliver a smooth and efficient service, reflecting the latest advancements in R&D and cutting fraud as well. And that's not the only thing. We are also working directly with HMRC and inspectors to help them understand our sector. And just this morning, Penny was part of a group from our finance committee helping deliver a training session to HMRC inspectors on that. So that was really great. And we're working on behalf of members to deliver that. Moving on, we've got lots to get through. To help listed companies or to help companies get onto the stock market, there was a reduction in the annual allowance for cash ISAs to 12,000, whilst maintaining the annual allowance at 20,000, which basically means that £8,000 headroom will be for stocks and shares ISAs. So this is encouraging people to move away from saving all their money in cash and actually to invest in the stock market, something that the city has been calling for some time. And also, as they have been calling for, there will be no stamp duty on shares traded after the first 3 years of a company listing on the stock market. Again, this is a regulated market, so AIM already has, I believe, no stamp duty, but now that's kind of been extended for the company's first 3 years on the main market as well. Penny, any views on that?
So look, this is all part and parcel of the government's attempts to encourage UK listings, to encourage the investments in UK listed companies. And I think, look, these are announcements, both announcements, particularly the no stamp duty on shares. For 3 years after a company list, these again are welcomed, and they are supporting long-term growth. What I would say is that it was, and I'll start with the positive. It was disappointing that we, as yet, have not heard anything on the wider consultation that the government has undertaken in modernising the stamp duty on shares and marketable securities. So the government has started with a call for evidence, and then we saw a consultation on modernising the whole system for the 0.5% stamp duty taxes on the transfers of shares and marketable securities, moving very much to a digital system. I think we would have hoped in the budget last week that we would have seen an announcement as to kind of what was actually happening and when changes would be introduced, and we haven't seen that. So the if you like, the 3-year exemption for stamp duty, it's actually stamp duty reserve tax on agreements for transfers of shares on UK for UK listed companies. I very much see that as a transitional measure whilst we await what is going to happen with stamp duty more broadly. All we got in the budget was an announcement that the government would be introducing regulations to allow it to pilot a new digital service for stamp duty. And again, that's a little bit disappointing, if I'm honest, because a pilot for a digital service when we were hoping for a rollout of a complete kind of digital service for stamp duty. So hopefully we will see that soon. I think this is just the start, if you like. These are very much transitional measures, and I think there will be a lot more to come over the next 12 to 18 months in relation to what is happening about modernising the stamp duty system. And that's very much in need of modernisation, and continuing this theme of trying to encourage UK listings and investors and the public to invest in UK listed companies rather than obviously abroad.
Yes, yeah, there is a lot of work going on. I know the stock exchange leads something called the Capital Markets Industry Task Force that's developing a lot of these ideas. I know it's working closely with the Treasury, so more to come. But yes, I hear your comments about disappointing, slow progress. Now, I have never really had to do any business rates policy before, but I had to quickly get up to speed on this following the news in the budget, although we had heard whispers of something along those lines coming. But there's been a fair amount of reform of business rates. This is what occupiers or owners of buildings have to pay according to the value of properties judged by their local councils. So they've changed all the rates, but introduced a particular higher rate for companies, buildings with rateable values over 500,000, whilst also reducing the rate for other types of businesses, particularly with a focus on helping the high street, so hospitality and retail. There's been also a revaluation exercise of those values of properties that are currently published in draft, but will be effective from April 2026. So we've been trying to understand the impact of this because we do know that our members have quite high property costs. They obviously have to have office space and laboratory space. Increasingly, we're seeing those properties in London as well, so they're obviously more expensive. So we do know members will be impacted by this. We know most businesses will be impacted by this. Something around across the whole economy, about 10% rise in what businesses have to pay. We suspect it might be disproportionately impacting our sector. We do know of some members who expect their costs to be raised. We'd love your feedback on this to know how much of an issue it is, but whether it impacts businesses and by how much really will come down to the specifics of that company, its property, where it is, etc. as well. So yes, do let us know either in comments or emailing the BIA afterwards. Now, this was going to be just one slide until yesterday, but then there was quite a significant announcement, as everyone will, I expect, be aware. In the budget itself, there was very little mention of the commercial environment for life sciences in the UK. This is mostly around what the NHS pays for medicines and how that impacts the attractiveness of the UK as a location for life science companies to invest and to launch new medicines. There was an intriguing line in the OBR's famously leaked report that went out before the budget, just flagging a potential risk to the Department of Health budget, saying that a 5% larger rise in branded medicine spending would cost 0.7 billion over the spending review period, more than anticipated. This is just a part of OBR's responsibilities to highlight any changes that they could see coming from government policy, but it did suggest that they knew something was possibly afoot. So we weren't really anticipating anything more to come out, but then yesterday happened. So we're still very much digesting the announcements from the US and UK governments on the negotiations that have been going on for quite some time after the voluntary pricing and access and growth agreement negotiations that started in about February this year, kind of concluded without agreement towards the end of the summer. But since that time, at a very high level, US and the UK government have been negotiating a new agreement basically to avoid tariffs and the impact of Trump's most favored nation pricing policy as well. So this has been led by Number 10 and Varun Chandra, who's the Prime Minister's business advisor. And out of the ether, it popped yesterday with really very significant announcement for our sector. So the VPAG rebate rate will be capped at 15%. It's currently about 23, just over 23%, and was anticipated to rise next year and the year after to around 26%. So this really is a very significant cap for the rate. This meaning that the industry will pay back less than anticipated to the NHS for buying its medicines. The UK government has also agreed to raise what it pays for new innovative medicines, by about 25%, which will be achieved through some changes to how NICE assesses the cost effectiveness of new medicines, particularly raising the £20,000 quality of adjusted life year to from 20,000 to 30,000, which is about a 25% increase. And at the upper range, I think it's 25 to 35,000. And it will also amend some of the ways it adjusts for certain kind of other impacts on the benefits of medicines, particularly taking into account the societal views of what constitutes a healthy and quality life for patients. So this is really interesting. Something the BIA has been calling for quite some time is for NICE to take into account the societal benefits of medicines, the wider benefits they provide to society and to the economy as well. So this is a small step in that direction. And also, so the VPAG current agreement, it runs until 2028. It would then obviously have to be renegotiated, but government is going to kick off soon a review of VPAG so that the industry and government are in a strong position for those renegotiations or whatever else happens at the end of this period. Now, in return for that, the US has promised not to impose tariffs on pharma products coming from the UK to the US, and also to cap tariffs on medtech tools or medtech and medical tools, diagnostics, etc., at 10%. So we are now the only country in the world that has zero tariffs on pharma products going into America. So really quite a significant win. The US has also agreed not to target the UK for unfair trading practices, which is something called Section 301 from US legislation, allowing them to take action on other countries that they feel are putting up trade barriers, and NHS pricing would be one of those. And then finally, there's a line saying that they will avoid the impact of most favoured nation pricing on the UK, which we assume basically means that when companies in the US have been asked to offer the cheapest price of other countries for their medicines, they won't be looking at the UK price for that as well. So really quite significant. So big news. It's been welcomed by industry. I think the big question is, where does this money come from? We don't quite know how much this is going to cost. There was, of course, that 5% change predicted in the OBR, but one would have to calculate that up, multiply that up to try and figure out what the overall budget impact of this will be. The government has so far not stated that. And will it come from the Department of Health's budget, i.e., will it have to be found within current NHS spending, or will the Treasury provide new cash so that the NHS doesn't have to reach further into its pocket? All questions that we know are going to be very much on everyone's minds, and I expect there'll be questions in Parliament about this as the Lib Dems and Conservatives press the government on how much all this will cost. So we will try to answer as many of your questions on that as possible, but it is an emerging area. We understand there are still details to be announced. Some of the elements of it need to be ratified by ABPI, who negotiates BPAG as well. So we expect more information to come. Also, NICE will be holding a webinar tomorrow. We'll send around the link afterwards for members to get more information from NICE about how those quality thresholds will be changed. So we're interested to know whether you think this was a good outcome for the sector or not, particularly UK life sciences. Is the US and UK pharmaceutical deal a good result for UK life sciences? We'll go to pop up a survey now where you'll be able to answer yes, no, or not sure. Keen to know. I think a lot of members are still trying to judge this. It's a complex economic question, of course, but in your gut, does it feel like a good deal or not? I'll just give it a minute or two for everyone to vote. Can we see the results? Not sure. But overall, 41% saying it's a good deal for UK life sciences and only 2% saying no. So that's actually more positive than I was expecting. But of course, it is a complex deal. So I'm not surprised that 58% are saying not sure. So that was the really big announcement outside of the budget, but there were a few others that we've seen in the past week or two. UKRI, UK Research Innovation, the government body that funds most research funded by grants in the UK, about £9 billion a year. Um, the the science secretary, Liz Kendall, gave a speech, and there was a big announcement on the Monday last week, really shaking up how UKRI is going to fund research and innovation with again, as we saw in the budget, an explicit focus on scale-ups and also supporting critical technologies like AI and engineering. So a big focus on kind of picking winners. What does the UK do well? Where should the government place its bets? And it's looking like life sciences and engineering biology is very much in the sights there, and scale-up companies as well. So that's really welcome. There's not much more detail at the moment, but they did say that 8 billion would be allocated to funding research on government priorities. So those are the 8 industrial strategy sectors, of which life sciences is one. 7 billion will be specifically to fund innovative companies, and then 14 billion going into curiosity-driven research. Usually UKRI, which is made up of research councils and Innovate UK, has its funding allocated per research council and per Innovate UK. We don't have those numbers yet. Maybe they won't even be giving those numbers in that way again. But to me, instinctively, 7 billion for innovative companies suggests 7 billion for Innovate UK over the spending review period, which feels like a significant budget uplift to me and a rebalancing potentially away from curiosity-driven research or research generally conducted in universities and towards funding innovation within businesses, or at least the spin-out process as well. So we'll have to wait for more information on that, but certainly very interesting. But what you don't need to wait for is the opportunity to get hold of some of that funding. So in our letter to the Chancellor, we did ask her to bring forward funding competitions, and here we are. Currently, the biomedical catalyst small projects and large projects competition is open for applications. You've got a few days left until the 10th of December to apply. Biomedical catalyst, obviously a competition that the IA has long championed after it was introduced in 2012. There's also a Women in Innovation Award, 75,000 available, and opening on the 10th of December, this new Growth Catalyst competition from Innovate UK, where companies partnered with investors will be able to bid for up to £2 million. So very welcome. Also on during London Life Sciences Week, actually, the British Business Bank published its 5-year strategic plan. The British Business Bank obviously directs into funds or directly into companies, making equity investments. And now within the strategic plan is rolling out what it calls investment services, which is basically being able to invest money on behalf of the pensions industry or other third-party investors, as well as the government's money. It, of course, had its budget increased by 2/3 at the spending review earlier this year. So it now has a significant amount of capital to deploy, and it says that UK scale-ups will be a significant focus of that. The Mansion House agenda was absent completely from the Chancellor's update, but we did have also during London Life Sciences Week this update from the British Business Bank itself, saying that it will expects to close the first £200 million fundraise of the British Growth Partnership. This is that third-party fund that the bank runs and Aegon, NatWest Cushon, and M&G have all committed to put that £200 million in, that will then be able to be allocated or invested into the British Business Bank's portfolio of companies and funds, of which about a third of that is life sciences. So really significant development. BI has obviously been campaigning for the pensions industry to invest into our sector for quite some time. So really welcome news. And alongside that, the bank plans to launch VentureLink, it calls, which is again it providing advice, help to the pension industry to understand venture capital and the opportunities of private companies in the UK. So yes, really great announcement there. Um, so out combined some very significant developments for the sector, strengthening of our commercial environment, some welcome changes to tax incentives, but also the opportunity for things to evolve further through that entrepreneurship survey. Uh, Penny, we're going to go into Q&A in a second, but I'm wondering if, having heard all of that, have you got any further reflections?
It was a strange budget from from a tax lawyer's perspective. It was a very strange budget. I think I mentioned this to you previously, Martin, but tax lawyers and advisors they await what's called the OOTLA, which is the overview of tax announcements. And believe it or not, that wasn't actually. It usually comes out 2 hours after the budget, and it didn't get published until Friday afternoon. Which was a bit strange, and it keeps getting amended now. And the run up to the budget was strange. It's been a strange one. All I would say is that one of the overriding comments from businesses over the last kind of couple of years, few years, where there's been significant amounts of change, and whether the businesses are small or large, has been we need stability, we need certainty, and actually rather than constantly talking about what we can, how the tax system can support growth, can we just have some certainty and stability, and that might actually support growth? And I think what's a little bit disappointing, or very disappointing, is that the budget itself didn't have huge changes. The government has, stuck to their corporate tax roadmap in terms of maintaining the rate at 25%, which is what they said they would do. And that, there's a few tweaks around the edges. There's a reduction in capital allowance rates of the main rate from 18% to 14%. But by and large, from a corporate tax perspective, the system is relatively stable. It's just a shame that the few weeks before the budget were full of so much uncertainty that I think it kind of cancelled out, at least at the moment, the stability and the certainty, if you like, in terms of not introducing many changes in the actual budget itself. So I guess my reflection would be, it would be hoped that next year, if we're also not going to see a budget of huge change, that we don't spend the month before with lots of rumours of change, and then actually businesses might get the certainty and stability that they want.
Yeah, I completely agree. And it's slightly ironic that the Chancellor did do away with two budgets a year to kind of avoid that constant speculation
Yeah.
and anticipation. But it's not quite worked out that way. So we've got a few questions. I will be sharing the slides afterwards. It will go around in the email. Comment, I suppose it's a question and a comment from Wayne Shannon, highlighting that there are other countries around the world that have a more generous, in some respects, R&D tax relief. Yeah, we are very aware of that, especially the Australia example, and we do know that members do look over there, and we are raising this with the Treasury. I think I don't know, Penny, whether you want to comment on this. I think there are some things that companies should look out for in terms of how to get that higher relief in Australia. That might not be everything, it seems, but certainly we are calling on the government to look across the whole world and make sure that we have absolutely the top most generous relief.
Yeah, I'd agree with that. You have to look at investment environments in their entirety rather than just simple tax the simple tax rates, and often the tax rate doesn't say it all. You have to look at kind of what are the conditions, how do you access those tax reliefs. So nothing is ever as straightforward as it seems. Look, we are very aware of that. I know the BIA continues to talk to the government about tax rates, and like I said earlier, I think that with the changes having been introduced, with hopefully better measures in place to combat fraud and abuse, um, we can and will start to see at least a warmer reception in terms of increasing rates. So I would watch this space on that
Mm,
as the reliefs
yeah,
become more targeted.
yeah. Uh, Comment from Jim about the Chancellor is talking a good game about scale ups and growth, but are they actually delivering? I think it's fair. We've definitely got to hold the government to account and hold the feet to their fire in terms of will they deliver? The life sciences sector plan was a great blueprint for what they could do, and now we've got the US UK deal kind of addressing the commercial environment, which was notably absent from that sector plan. So yeah, we've got the building blocks of a great policy framework for the sector, but it is absolutely all about delivery. You're absolutely right. Um,
Martin, I just add to that.
mm,
Ultimately, and we have seen this, we know that there's a challenging economic environment, and there are difficulties in place, but we have certainly seen in recent years, whoever's in government actually, that when they publish a call for evidence, they will listen. Again, I really do urge people on the call and those who are affected by the issues raised in the entrepreneur's call for evidence to submit responses, because that is one of the best ways that we can help influence decisions and make sure that we have a tax system that works.
yeah, yeah, and I would say across the BIA's work, we can only represent the sector if our members feed into the BIA and equally if members feed into the government themselves. So do engage. It's no good just standing on the sidelines and complaining. Um, Pete Jackson, what's the view on changes to employment costs and rights? Penny, was there anything from a tax perspective on employment? Obviously, we had the NICs go up at the last budget.
So I am not an employment lawyer. I know that just after the budget, they changed the employment rights. So they were going to introduce unfair dismissal rights, I think, from day one,
Yes.
and now it's from 6 months. And I think that's something that, again, I caveat, I'm not an employment lawyer, but that is certainly being welcomed by businesses due to the costs involved. Um, Look, we had the significant increase to employment costs in the previous budget with the increase to employers' NICs. We've got the salary sacrifice changes, which obviously we haven't dwelled on now, which will represent a cost to business, but they're not coming until 2029. So as much as I'm a forward planner, and I would say to any businesses that I ever advise, you need to think ahead and you need to think about tax changes on the horizon. That's not something that's immediate, and thank goodness it's not something that's immediate. So I think that's also encouraging from the perspective of the government looking at what they introduce, what changes they introduce, and making sure that businesses have an effective lead in time to those changes. That is often a criticism that things get introduced very, very quickly. So I don't think there was significance in terms of employment costs. We are there is lots that we watch this space on, and obviously pre-budget there was lots of talk about changes to employment costs in relation to LLP members, and those were scrapped. So which again was a big relief for businesses structured as LLPs. So it wasn't a budget that was full of kind of tax changes in and around employment. Really, there's a lot that's going on behind the scenes in relation to disguised remuneration, but that wasn't in this budget.
Question on EIS and VCT limits in terms of the increases are great, but are they undermined by the reduction in relief? I think that's for the VCT specifically, wasn't it?
That's a good question. Are they undermined? And I guess you need to really get to grips with the stats there, and I'm sure when the government releases stats or the Treasury releases stats, we'll have a better view. I think again, this is about making the release more targeted. From my perspective, the changes to the limits, and I said this earlier, they're welcome, but they really are a correction because they haven't been revised anytime soon. So the skeptics around us could say, well, hang on, you've kind of corrected the regime to make it better fit for businesses in 2025, 2026, but actually you've reduced the relief. So, the real time effect is a reduction. I think we will have to kind of I caution before drawing any conclusions, and I think we have to look at the stats, and again look at what happens to these regimes going forward, because I do think that, and I think the call for evidence very much says that they will be looking at kind of the effectiveness of these regimes and reviewing them in their entirety. And I would certainly be in favour of increasing simplicity, so reducing some of the onerous conditions in order to access them in the first place.
Yeah, thank you. Well, BIA, as I said, will certainly be feeding into that entrepreneurship call for evidence, making those points, and many others as well. So we appear to have no more questions. So Penny, thank you very much for all your contributions and really great insights and comments. And thank you everyone for asking your questions. This isn't the only event that we have. We've got another webinar coming up on the 9th of December about our future health and access for SMEs to that valuable health data resource. There's a Women in Biotech event on the 10th of December in London. Tech Bio Boost, which is our boot camp for early stage tech bio entrepreneurs, has a demo day on the 15th of December. And then taking us into the new year, at the end of January, the BIA Gala Dinner, I believe, is now sold out, but we will be opening for application or for tickets, a few individual ticket tables available very shortly, if not already. And then on the 5th of March, Women in Biotech in Cambridge, big event there. So lots to look forward to. Thank you very much for joining us today. If you're not a member, please do get in contact about joining the membership. And as always, we're very grateful to our annual supporters for supporting all of the work we do. So thank you for joining. Penny, thank you again for being part of this webinar. And I will wish everyone goodbye.
Bye.
Goodbye.